Hey, what's going on, everyone? And welcome to the housing market update for April 2022. And I know for the last several months, every time I make one of these recap videos, I say that things are crazy and we're at all-time high prices and low inventory, but those things continue to be true. So today we're going to jump into all of these indicators and metrics that dictate where the housing market is going. I'll share with you the latest data and what I think might happen next. But before we jump into this, I ask that you please subscribe to the BiggerPockets YouTube channel and give this video a thumbs up. It's a big help to us. The big story, as everyone knows, going into April of 2022 is interest rates are rising. As of this recording, the average rate on a 30-year fixed rate mortgage has gone up to nearly 4.6%. And just for context, we were at 3.1%. And this is really important because rising interest rates often put downward pressure on housing prices. And just to be clear, that hasn't happened yet, but let me just explain how this works. When mortgage rates rise, it gets more expensive for someone like you or me to buy a house at the same price because you're paying more interest on your mortgage every single month. And ultimately, that can decrease demand, right? As prices go up and it gets more expensive to buy a house, fewer and fewer people are going to want to buy that house, and that lowers demand. With mortgage rates, this tends to take time. It takes a little bit of time to impact prices. That reason is because a seller is still in this really strong position right now where prices keep going up. We are still seeing a lot of competition on the market. And until that competition dies down, until sellers are seeing their property sit on the market longer and longer and longer, they're not going to lower prices. They're going to keep trying to get these sky-high prices that we've been seeing for the last 3 years. But I think the important thing here is to watch mortgage rates and watch a critical metric I really like to watch known as days on market. If you see days on market start to go up, and days on market is basically just how long it takes the average property to sell, and it's super low right now. But if we see that starting to go up, that signals a shift that we are moving from the ultra strong sellers market that we are to a slightly more balanced market. And listen, we'd have to see days on market almost double to get to a place where we're at a balanced market. I don't think we're anywhere near that. But even just any indication that days on market start to go up could indicate that we're going to start to see this rapid price growth that we've seen over the last couple of years start to taper off. And that's important because right now we are actually seeing prices at 17% year-over-year growth. That's as of February. And that is insane. It was actually starting to level off. We were starting to see 14, 15% year-over-year growth over the middle of the winter, but now we are back at 17% year-over-year growth, which is the strongest such indication since August of 2021. August 2021, things were nuts. So that's what we are seeing again here in February 2022. Ultimately, there just aren't enough houses to meet the demand of house buyers right now. According to Redfin, we are actually at all-time lows for inventory. Let me just read this to you. Active listings in February were just about 1 million. So that's how many houses were on the market at any point in February, were just 1 million houses. And maybe that sounds like a lot, but just for reference, in last year, in February of 2021, we had 1.25 million, and things were already crazy back then. In February of 2022, so right before the pandemic started, we were at 1.85 million. So we are almost at just half of the amount of houses. If you know anything about economics, you know that severely constrained supply like we're seeing right now is going to lead to upward pressure on the housing market. So that's sort of where we are in the housing market as we enter the second quarter of 2022. We see interest rates going up, and they are probably going to continue going up throughout this year. I can see a scenario where mortgage rates are even at or above 5% by the end of the year. At the same time, we are not seeing demand drop off, which is unusual. We are not seeing demand drop off with rising interest rates because inventory is so low. There are just so many people who are trying to get into the housing market. This is, of course, first-time home buyers and millennials who want to buy their first house, but we've also seen second home demand go up by nearly 90% since before the pandemic, and we've seen an increase in investor activity across the housing market. So all of these factors, all of this demand that is remaining strong despite rising interest rates, and this super low inventory is leading to a very uncertain housing market. I personally don't recommend trying to time the market if you are a real estate investor, and to instead focus on long-term investing. But because I'm here talking to you about the housing market, I will give you my best guess as to what will happen. I actually personally believe we're going to continue to see above average housing price appreciation through the summer. I think it could come below double digits. Maybe we'll see 12 or 10 or 8% through the summer. And then by the end of this year, we're going to see it really start to come down to maybe 7, maybe even as low as 3 or 4%. Eventually, I do think things will flatten out, but I think 2022, just because inventory is so low and demand remains so high, that even rising interest rates is not going to put us into flat or negative price growth, at least into 2022. At this point, honestly, I don't really want to even guess what's going to happen in 2023 because things are just changing so rapidly. But again, despite all of this uncertainty, nothing has changed for the long-term prospect of rental property investing. If you buy a property and intend to hold it for at least 5 years or longer, the prospects of generating a great return remain as good as they ever have, in my opinion. So that is my best advice to you. Think about the long term, focus on long-term investing over short-term profits, and you can still find great deals in this market. All right, everyone, that's it for me today. My name is Dave Meyer with BiggerPockets, and if you want to connect with me, you can do so on Instagram, where I am at the Data Deli. I hope to see you all there, but if I don't, I'll see you back here next week. Thanks.